This is Irontrader, and this is the weekend edition. Now, today's video is going to be all about trading. We're going to take a look here at candlesticks and candlestick patterns, but instead of just looking at the patterns, what we're going to do is show you an actual chart of what it looks like at an actual, when you're trading during the day versus just the lines, okay? We're going to show you the actual candlesticks. So that ought to be pretty interesting. Then what we're going to do is we're going to show you where to put stop losses in. That's going to be very, very key for you. A lot of people want to know, hey, where do I put the stop losses in there? Should I use a stop loss and what percentage? And then we're going to take a look at as some other charts. I'm going to give you some patterns and like what I trade and what to look for. And then we're going to end up here with Peter Tuchman. He's got a little quick 5-minute video on about how he's trading. Okay, this video is for information purposes only, not a recommendation to buy, sell a stock, commodity, ETF. Please like and subscribe. Thanks for watching. Okay, here we started off here. We're going to have some just basic candlestick patterns to look for, okay? So what you always want to do is just get back to the basics, okay? But keep things simple. Don't get things all complicated. You know what I'm saying? Oh, I'm going to do this and this and this and this. And another thing is don't do is just watch what is in front of you, okay? Trade what's in front of you, not what you want or what you think is going to happen. You don't make any money that way, okay? So what we're going to do is just look at some basics candlesticks, and then we'll progress as the video goes on. So here we have a nice bullish engulfing. So when you see a red candle, you say, oh, okay, now what is this here? But then when you have that green candle and it just engulfs, is pretty much what we had on crude oil here last week, where you make a lower low, and what you do is you fake everybody into, oh, this is going lower. And then what it does is it gives you that short squeeze, and then it takes it all the way here, and then you engulf the previous day, which basically means your high and low is above your high and low on the previous day. Now, here's just the opposite. You're bearish, where you have a green candle. You think, oh, she's going to rip up. But then what you get is you usually get a higher high here, and then it sells down to a lower low. And this is never what you want unless you're short. That's the key. Now, when you see a red candle, and all of a sudden we see this is almost like a little bit bigger than like an indecision candle. This is always very, very bullish. Then obviously here, this is just the opposite of what you want. When you see a green candle, you want it to rip up. You don't want to see this red candle, which is basically an inside day. Now, an inside day was just the opposite. It means the high and the low are the inside of the high and the low of the previous day. Now, these kickers are always very good because you get a red candle, and then what you get the next day is it just kind of like breaks out, and then it just rips rail up higher. That's always very good. You always want to look for that pattern. Now, three white soldiers, that's always very good because basically it just said, hey, I got a series of higher highs and higher lows. You always hear me talk about that. That's always very good. Now, this is the reversal of it, where you see that high, then you see a lower high and a lower high and low, lower, low, lower. This is always going to go down until we get a reversal candle. Now, again, if you're short, this is what you want to look for. If you're long, this is what you want to look for. Now, here's the bearish kicker where you have that green candle, just the opposite of what this is. Nice green candle, and then it goes to the bottom, and then she closes all the way on down. Okay, so what you do is just take a look at this, just review these, and just what you want to do is always look for the candles here that'll give you the advantage however you're trading. If you're a long trader, you say, oh, okay, this is what I'm kind of looking for. If you're, let's say, hey, I'm a short trader, then this is what you kind of look for. Anything that's with the bearish, that'll give you an edge. Okay, let's go to the next pattern here. Okay, here we have candlestick. Now, this is like a little cheat sheet here, okay, that I always use here because no matter how long you've been trading, you always want to just say, hey, I'm just going to kind of go back to basics. I want to relook at it just to make sure that I'm doing everything right. So, okay, so we have your bullish, we have your bearish, and then we have your neutral situation. Now, I always talk about these hammer situations because what you're doing is it comes all the way down here and everybody thinks it's bearish, okay? And then it raises right up and you get yourself a nice good hammer. Now, this inverted hammer, this is kind of cool too because what it is not like this here. See this where you have the red candle, but this goes up higher, comes down, but it's a green candle. That's what you always want to look on a closing basis. That's the key. Now, here we have a continuation pattern here where you have them series of higher highs and higher lows, okay, situation. And then when it comes all the way and down here, what it does is it puts in a higher low. That's also another good buying opportunity. Now, again, here's that engulfing where you put in a lower low, and then she just swallows the previous candle and shoots right on up here. Very nice. Now, these tweezer bottoms, I always talk about that because we had that tweezer top on natural gas here last week. okay, where you get a red candle and then you get a green candle. See, that looks just like tweezers, okay? But that's bullish, okay, if you get it in this scenario. If you get it like this scenario, well, then that's bearish. Now, here's another good situation that you always want to look for, where it's almost like a bull flag situation where you have a nice green pole and then it sells off, sells off, sells off, and then it starts ripping. Now, what you want to do is when you see a candle like this, if it goes above that top of that candle and holds it, then you know you got this kind of a pattern because then she wipes out this candle, this candle, this candle, and it just engulfs all of those three candles on within one day. Very, very good. Morning stars are also good because you got a red candle, and then what you have is almost like an indecision kind of a candle, but the next day you get a green, and that tells you got to get long. Okay, so these here are always good here too because like these three stars. Okay, because what you get is you get this a red candle, and then you get a lower low and a lower high. But you notice how the candles are shrinking, okay? So when you see that, it looks like the selling is done, and that's where she rips up much higher. Now, here's that bullish candle. This is what I always like to look for, is where you see that nice green candle, then you see that series of lower, lower, lower high, but it's really no big deal. All looks like it's just like a nice flag going there. And then what you do is you get that green, that again, when you get above that, top of that candle, then she rips up highs. Very, very nice. Now, bearish candle, we'll just go through this. The hanging man, very close to a hammer, but it's a red candle. Same way with this. When you see this rising right up and you see it closes red, that's not what you want to see at all, okay? Now, this is really not very, very good here because what you do is you see all these lows and you think, okay, well, this is going to rip right up here. But the problem is it goes up to this scenario here and then she falls right off the map, okay? Okay, bearish engulfing, you got a nice green candle. And then what you have is a red, okay? And what it does is when you put in, like you either a lower high or very, very close to that high, and then you put in that lower low and it closes on the bottom, that means that's going to go lower, okay? So here's that tweezer top, just like we had that tweezer bottom. And this is what we had on that gas here last week here on that 5-minute chart, when it went right on up here and then retested it and then comes flying right on down, okay? And this is this is basically a good bear flag situation. You have a pole and it's rising up, but you can't really get above the top of this candle. And then she just comes out and you take one candle, one day, wipes out all of those three candles, okay? Evening star, just the reverse of the morning star. You have a green candle and then you have that indecision and the next day she's red, okay? Okay, advanced block. What you do is you got the same kind of a scenario as we had here, but what you do is see how small the candles get. That tells you that the buying is all done and she's going to go lower. Now, we're going to have a bearish mat here. This is always, it's like a bear flag, except that the candles just don't get up nowhere near. It's up to the top. And then you get that one candle. It wipes out not only the three candles, but it wipes out all, and you put in a lower low besides all that. Now, these are neutral candles. They call it a doji, but it's like an indecision candle, okay? You don't really know what it's going to do. These dojis here, gravestone, because there is no green, there is no red. It just kind of like, it goes up here and then ends flat. So you don't have any really way it could go either way. Same way with the dragonfly, because it doesn't have a green or doesn't have a red. It looks like it goes all the way to the bottom and finishes off at top, but it kind of finishes neutral, okay? So your pattern would be here, and then it comes all the way down, and then it finishes flat, okay? So just take a look at all these candles here. This might help you in your trading situation. Okay, let's go to the next pattern. Okay, this here is about scalping. Now, what we have here, this is what I always look for if you're going to be scalp trading or day trading or whatever you want to call it, okay? Here's what we do, is it runs right on up here, and then it sells right on off. And then what you do is it puts in this bottoming tail, okay, where you put in a lower low. Everybody thinks that that's going to go down, but then it rises right up. And that's where you get your short squeeze. Now, as it rises all up here, then you put this neckline in. See this neckline going on here? Well, you don't want to really, you can buy this, okay, and scalp it into that neckline. That is a buying opportunity. But a lot of times, if you really say, hey, no, I don't want to do that, I'm going to take a little bit longer, what you do is you wait till you hit the neckline and then wait for it to come down and retest. Okay, so what you do is I always like that retest because that's more of like a guarantee where 90% of the time it just rips right on up here. A lot of times this can rip up here and then it can fade right on off. So always remember that. So as it comes on down, then what you do is you buy this retest. The reason you buy here is because now we have a higher low situation than we have here. So you put a low, and then we put in a higher low, and then when you get that green candle, That's what tells you now I got to get long. But what you do is a lot of times it doesn't go right through that neckline. You watch that neckline, say I'm long, you got a long position from here. You watch that neckline right there, okay? And then what you do is if it breaks above it, then you know she's going to go much higher. That's the key is this neckline. See this W pattern? See how this comes up like this, comes down, that makes a W, and then she shoots up really, really nice up here, okay? Now, when you're trading on something like this, what you do is you take the trade like, okay, I wait for this hammer to come down and I'll trade the trade on the next candle because once it turns green, okay, that's the key. But what you want to do then is you can put your stop loss right below this bottom of this candle, say, okay, or you can put your stop loss, right there below. Now, natural gas and a lot of times in crude oil are really wet and wild. So sometimes you got to give them a little more room. Otherwise, you're going to just keep getting stopped out here. Okay. So let's just say this is $10. Okay. This came to $10 and this goes up to $11. Okay. And then this comes right down here to say, 10.25. You say, okay, I'm right in here at say 10.30. Well, you can put your stop loss here right back at your $10 level. Or what you can do is just say, hey, this is 10.25. I can put my stop here, like say 10.20 or 10.25. Or you can even put like a break-even stop. But a lot of times what you want to do is you want to give it, especially if the trade is like a natural gas where it moves, back and forth, has a big time moving during the day. A lot of times you want to leave it a little bit loose and say this is $10, then you can put your stop at like say 9.90 kind of a situation. Even though I'm buying it up here, okay, at say 10.30, we have a stop there, that's like a 40-cent difference here on the stop. But if you don't feel comfortable with that, what you can do here, if this is at 10.25, you can put your stop at like say 10.10 or 10.15 or whatever, even though you're in at 10.30, and it would keep it a little bit tighter. So if this comes down, because a lot of times these patterns don't always work exactly like this, but I say if it does come down, you get stopped out for very, very little, okay? And then we just wait for the next trade. But a lot of times here, what you want to do is just watch these patterns. See how nice that W pattern is? And then when she breaks that neckline, then she just rips up very, very nice. Okay, let's go to the next chart. Okay, now this, if you're like a day trader kind of situation, this is what you want to really go. This gives you a good, pretty much view of what's going on here, okay? So here was that low. You look at the low on the chart right there, okay? And then what it does, it rallies up here very, very nice. And then you never want to buy really. A lot of times you can buy that, but I like the retest, okay? I like to when it has here the retest. Now you can see a low, and a higher low, and it came down very, very nicely here, okay? That is your buying opportunity, okay? Then what you do is it runs right on up here, but when you see this green candle, that's fine. But when you see that lower high situation, that's where you go there and you sell. Okay, so when you see this pattern, it comes right on down here. Then you see that bottoming tail again. You can take another scalp. I wouldn't buy it here. I'd wait till we get the green candle and then take it all the way on top here. But when you see a topping tail like that, then you got to sell and get out of the trade. Okay, so here's another scenario here where you see a buy point, okay, like right here. And then what happens, okay? It puts in a lower low, but then it starts getting green. Okay, so I don't buy it right there. I always wait for that next candle, and then I just take it up as high as I can. And I probably would have sold it up here. I wouldn't have waited here because we had that topping tail situation. Okay, so then the same thing like going on situation here where I wouldn't buy it on this candle here, this red here where it says buy. I would wait to the following candle, okay? And then when you have that next candle that's green, then that gives you an opportunity. Or when you look at this pattern right here, you don't have that much. You got to be really quick, okay? So you'd have to use a tick chart 1 or 5. So for me, I would wait till you go up and then retest it like on this candle. See that series? High, lower high, lower high. This is where my buy point would be. And then I would take it all the way up here. Then when I see it topping out, that's when I would be selling the situation. So that's the same way with here. So you have the low. This is kind of pattern that I would do right here, okay? So I would not buy here. I would buy here on this because we have that retest now. So when we look at this pattern here, okay, all these buys have question marks, all the sells have question marks. So what I would do is, see, you have a low, then you have a higher low. I would wait, okay, and then what I do is then I would wait for this candle. Once it starts turning green and it gets higher than what we have at a topping, that'd be a good time to say you just rip that right on up. But don't be afraid to sell when you see these topping tails. You got to sell and get out. Even to say, that's why I always say just trade what's in front of you, okay? Take what the market gives you, not what you want. So say this scenario here, you don't buy it here, I buy it right there, and say this gives you 20 cents on natural gas, okay? Okay, that's good. You take it and you wait come down. There's always another trade. But see, the situation here, I wouldn't buy here. I'd wait till you get that green candle, then you can rip it on up here. Same way with here. Wait for that bottom, okay? And then you have the higher low, and then higher low, when you see that, boom, you can smash right up because realistically, if you say I bought it here, to there, you're probably looking maybe 10, 15 cents. Is that worth your time? Is that worth the risk? Okay, everything is risk reward. What you want to do is when you start seeing these series of higher lows, that's the key to time to say, hey, I want to get into this, and then we can have a nice good run up. Say, hey, I can make 30 cents on the trade. Just have a little patience. So always let the trade come to you. Don't force it. Say, hey, I got to get in here. I got to get in here. I got to here. And then what you do is you like a revenge trade, and then all you're doing is trading and you're spinning your wheels, but you're not gaining anything. Okay, let's look at the next chart here. Okay, here we have a chart of patterns. Okay, so this is a little bit more realistic view of what you're seeing. Okay, because last week I showed you like these patterns. Okay, so you got a nice double top situation, but this is what it actually looks like in reality. Okay, see the difference? Okay, see where I have a line comes down and I can hold this, and then you can have a target all the way down. See, when you get that double top situation, this is how I look. And what you always want to do is watch that neckline. Okay, so just say I'm shorting the stock and I see this up here. I have a high, I have a lower high. Well, then you wait for that to come down. This would be a nice opportunity to sell your position, or you short it and you wait for what happens at the neckline. A lot of times what happens at the neckline is this right here. Okay, so it runs up, makes a high, comes on down, makes a higher high. That tells you when it makes that lower high, that means you got to get out of that trade. Watch what happens at the neckline, but you can ride this thing all the way down. Now, again, say it doesn't sell all the way down. Okay, it doesn't go down. Well, then you can sell your position right there if it starts rallying right back up. But a lot of times, when you have that double top situation, she comes flying down there very, very nicely. Now, here's the same thing on the double bottom. So what you do is it comes all the way down. What you do is you don't buy it right here. Let it run up right to that neckline and then come back. Now, what you're really looking for is a low, and we're looking for a higher low. That's the key, the higher low. Once you can get that, then you can take it all the way up here, and then you watch and see what's happening at that neckline. But you got to be patient. You got to be patient. A lot of times it doesn't get through the first time. But if it does, then you have this scenario where it came down, went up, right here's your buying point, and then she goes blast right through that line, and look at the nice trade that you have, okay? So right here is an inverse head and shoulders. This is what we had on crude oil here, okay, where you had that left shoulder and the head, and then we had that right shoulder. Then what we were always watching is you're watching this neckline pattern to see what was going to happen. Is it going to smash all the way down, or is that where it's going to stop and roll up? A lot of times what you do is you get this, and then boom, all the way on down. Now, here's the reversal of that inverse head and shoulders where it comes up, then it comes down. And see, you always look for these patterns within your chart. So there's your head, there's your left shoulder, there's your right shoulder, and then always watch that neckline situation. If you break through it, then you have that really nice W pattern that's going on here, and boom, up she goes. Same with the falling wedge. So when you look at this, you say, geez, that's hard to see. But see, that's how easy it is to see, because everything isn't going to be exact. It's going to be exact perimeters, you know what I'm saying? It's going to be exactly inside it. Sometimes it pops on up here, pops all the way down here. But just as what you're looking for is a rising wedge, but it's looking for it as you're looking very, very, see how big it is here, and then it just tightens up. Well, when it tightens up here, it's got to bust one way or the other. And a lot of times these wedges here, they'll break right to the downside, and then this is what you get, okay? So when you have a falling wedge, this just does the opposite. Because what it does, you got really big, and it tightens all the way down like it's going to go all the way down, and then you get a pattern like this. And then once you break that trend line, that's your buying opportunity, and boom, she just smashes right on up here. Very, very nice. Okay, so when you have these downward wedges, this is almost like a bear flag situation, okay? So you have a pole there, and it rises up, getting nice and tight, but it can't get through that other wedge, and then this is what happens. She comes flying on down. So when you look at these patterns, nothing is going to be exactly perfect, you know, like this. Oh, look how perfect it is. No, it's going to look like this, where you have the outside, downside, you know, the bottom outside, upside, you know what I'm saying? That's what you're going to get. So when you have these like a bear flag situation, once you break that line, okay, because all you have to do is you can either draw a line, or you can pretty much tell right away if it's going to, as that wedge tightens up, you know, if she's going to start smashing through. But once she starts breaking through, then you know she's going to go right on down. So this is just the opposite here, because this is almost like a bull flag situation where it comes on up here and then it tightens on up, and then look what you get when you break on out here. Once you break that neckline that goes up the diagonal line, then she just shoots right on up here, and that's your trade. Okay, you can trade this area here. Okay, say so you can have a run up here, and then you can say when you see that topping tail, you can sell that, and then what you do, you can buy that up to the next point. You know what I'm saying? If that's the kind of trader you are. But if you just say, hey, I'm just a long-term trader, I'm just looking to get in, then you just wait until you see that diagonal in place. And you'll be able to tell because all you do is just look at the tops. You can see that series of highs, lower highs, lower highs. And once you start breaking out of that, boom, that's where you take the trade right there. And then she goes long. Okay, let's look at the next situation. Okay, here's what we have here. This is what we're looking at as stop loss. Okay, so a lot of people say they don't use stop losses. Or some people, yeah, I do. But here's what you do. Okay, see when it comes down, okay, you come all the way down and you have a nice good rally all the way on up here. Okay, so what you always do is look at that bottoming tail, okay, to see if it holds. Now this one here, oh, it just went all the way through. Yes, it did. But look where it closed, right above that line. That's the key level right there. So if you say, hey, I'm going to take the trade, I don't take the trade there. What I do is wait for this to come up, and then I'll take the trade right here because you can look at this. This is what we had there on the old natural gas there on the 5-minute. See, you had a left shoulder, you have a head, and we have a right shoulder. So when that comes down, okay, as long as it doesn't break that support level, there's the time that you take your trade because look at here, we have a bottoming candle. That's the time you take your trade. And then look at this candle here. See, you broke through that neckline and then she's going to go long. So when you set your stop, you can either set your stop here at what I usually do if I'll have a situation like this, I wouldn't set my stop down here. You can if you want to leave it a little bit looser. But what I would do is set my stop here right at this trend line, right at that closing. So what you do is just look to the bottom of this candle right here, okay? That's what you'd be looking for, and that's where you can set your stop, okay? So you lose that little bit between this level here, okay? But look what you got to gain, okay? So you got to look at the risk right there, and there's your reward, okay? See the big difference? Now, again, you could put your stop all the way down here, but then that's guaranteed that you can have a bigger loss, or you can put your stop at the bottom of that candle. But I just say what I do is always look to the left of the chart, and I would take that stop right there, and I would not buy this here. I would wait till we get the retest, and this is where I would buy it when you see that bottoming candle, and then she would take off, and I put my stop, and then as you go, then I would keep raising my stop up accordingly. But a lot of times, like with natural gas or crude oil, give it some space to run, okay? Because a lot of times they'll come down, and then the last thing you want to do is hit your stop, and then she just rallies right back up, and then you're all pissed off, and that's never good. Okay, let's look at the next chart. Okay, here's a stock. This is SD, okay? Okay, here we have, okay, so here's your entry point. So you rallied right on up here. So you don't buy it here. You wait for that retest, okay? So it broke back down, but you notice it put that bottoming tail in again, okay? This is your buying point. Once you can buy it here or buy it at that green candle situation, okay? And then when it runs all the way on up here, then you can just either, I would take it off. For me, I would take it off once I start seeing these topping tail situations, okay? And then I would just wait for it to come on down again here. Now, I wouldn't take it right here because you look at that, you see the yellow sticky, but you can see all the red candles. What you want to do is I would take another trade right back over here, and then what I do is I put my stop loss right there, okay? So you wouldn't have, this is what you're risking from that bottom of that candle to there. Okay, so that's what you're risking. You're risking about a little bit about $5 here, but look at what you can gain. Okay, so you can shoot up, but you're risking 5 to gain 45. Okay, so that's what I'm trying to say here. Now, I wouldn't put the stop all the way down here. That's a little bit too much of a loss. So, most of the time on stop loss, I either put like a break even, or you want to have like maybe a half to 1% at most. That's really what you want to do. Okay, so if you're trading, let's say a stock is at $50, you put a stop loss in there at $49.50. Okay, so you can lose 50 cents, but you got you have the opportunity here to gain a couple bucks. See, this is what you have here. So you have the 105. I can lose that. I come down to 100. I can lose $5 on this stock. Okay, I'll lose $5 here per share, but I got an opportunity here to gain $45 per share. You see, risk to reward. You want to keep the risk as little as possible and the reward as big as possible. So anytime when you see this pattern, you never go and you say, oh, hey, I got a bottom here, I'm buying this. No. Always wait until you get some kind of a retest. Okay, so even if it came below, you notice that it closed back above the line. then you can take it off. Now, to me, I always take it off in this area here because you can see all these topping tails. That usually is the first sign that says, hey, this is going to come off, okay? So, okay, say you sell it like, say, on this candle here, okay? So you lose a little bit. It's a big deal. You're never going to buy the bottom. You're never going to sell that top. What you want is that nice meat in the middle and put that meat right in your pocket. That's what you want to do, okay? Then you just wait, be patient. Now, I wouldn't buy it here. What I would do is I'd buy it right on here, okay, on this level here, because now we have a nice green candle and it didn't really put in a big bottoming tail, but you have a nice green candle to say, I'm going to take this thing higher. So just put your stop loss just right underneath that and keep it very, very simple because I'm risking $5 to make 45, okay? That's the key on how you want to trade. Okay, let's see what else we got next here. Okay, now here's crude oil. Here's a 1 minute chart. Okay, so I like trading off the 1 minute, the 5 minute, a tick chart, 15 minute, and if you want to spread the trade out a little bit, you can go 15 minute, 30 minute, you can go hourly, 4 hour, and then you can always watch it daily, a weekly, and a monthly to see what the long term is. Okay, so now when we're looking at stop loss here's crude oil here on your 1 minute chart. So here we have 78.14. Now you don't want to take that red candle. Okay, that's not good. So it popped up here, but then we made a little bit lower low here on this candle here. So we look at the high, you're looking at 78.15. Okay, so what I usually do, I would take that probably between 7.15 and 7.20. And then I would put a stop. I wouldn't put at 78.14 and never use round numbers. I put that like, 77.95. And I put a stop right underneath this situation. Let it run up here. Let's just see what happens. Okay, but give it a little bit room here because crude is kind of wet and wild. But the reason what I would do that is because, see, look at this RSI here, okay? So you pretty much bottom situation right there. And now you can see where you're moving on up here nicely, okay? Same way with your MACD. You can see where you had the green, but now you have that crossover, okay? So that tells me they're going to go either sideways or higher kind of a situation, maybe even they hit that 50-day. Okay, but leave your stops a little bit low, but never use round numbers. Now, you could use 78.05, okay? That would be good. You could use 77.95, however you feel comfortable with it, but never use like, I'm going to use 78 flat, because a lot of times to get 78, okay, it has to go down to 77.99. Okay, before they hit the 78. Okay, so that's usually what it does is when they see a bunch of stops in place. Okay, the big boys, when they have all those stops in place, don't let anybody tell you different. When they see those stops in place, they like to knock the stops out for you. Okay, so if you have a round number, that can go right down to that 70.99 very easily. So you can go right down, I would say, either like for me on this here, I would put in a stop at, say, 78.05, and I look at the risk, or I would go like 77.95. You know what I'm saying? But I would also look and see how crude is trading. So you want to never use round numbers, but just use just below the round numbers, but not too close, because a lot of times it can just blast down that extra cent just to take you off and piss you off is what it does. And then it rises right on up here. Now you're all the way back up to 28.20 level, okay? So you want to just take that, never buy the green, always look for the retest situation, a higher low, and then you can take it right on up there nicely. Okay, let's take a look at a different chart here. Okay, here we have crude oil on your daily chart. Now, crude oil has been a really good trade, but I just want to show everybody here, and I've showed you guys this probably a million times. But see, what you look at this chart, you say, oh, what big deal. Well, what you have to do is you have to try to find, see, there's your head, there's your left shoulder, and then there's your right shoulder. And see how this is fall right off here now? So when you look at that diamond, you look at that neckline, okay, if you can get it back, it doesn't have to be exactly perfect right across. It can come down on a slant or whatever, okay? But again, you always want to look for patterns inside of the charts. Now, what do we have here? Okay, so I always point out these bottoming tails. These are very, very key, okay? So we had a nice low, and it looked like it's going to blow right in here and then take, it's going to go lower. But look at how nice it engulfed the previous day. So that tells you, and it closed above the 100-day. So that tells you what you have to do is you got to get into the trade, and when the futures open, always watch those futures at 6. It popped right against up above this 8 simple moving average, and then you notice where it just sold right off Friday. So it golfed that previous day candle. However, when you look at this candle, it looks like 79.96 was the high. Always go to the left. See right there? What do you have? 79.90. You're within 6 cents. So you always look there. So that's what I was looking for, is this 77.90. Now I can see it popped up. Then I give it a little time. If it can't hold it, then I dump my shares and then I just took a short all the way on down, because the key level here is going to be this 80.14. Okay, see that at 80.14? That is going to be your big number right there as that 200-day. These are like brick walls. You're not getting through there the first time. Okay, it's just reality, not going to happen. Here's a perfect example. Okay, on the 21-day, it rallied right up and ordered to go right into that 21 SMA here, and then you put a nice series of lower highs, lower lows in there until we had this bottoming tail. Now we have to see how this is all going to shake up. Can it get back above that 100-day? Can it get back above that 8-day? Or is it going to sell right back down here and test this 78.89? Now, again, if it does, say it comes right back here to the 78.89, then you look for this to make a higher low. If it does, that'd be a good trade then to go long again. Okay, so that's what you want to look. Now, I keep my charts very, very simple. Okay, these blue lines are price channels. And all these price channels is just tops of candles. Okay, it keeps it very, very nice. Okay, so here's a good example of how you use those. Okay, 76.89 right there. So if that is that was bottom line, all that is the bottom of that candle. Okay, you take this 76.89 is the bottom of this candle right here. But what we're looking for is this candle here, that 76.79. It came up 10 cents higher. Now the price channel curved in. Okay, so what we do is we just look right here at the next channel that coming across. Okay, which is basically just this candle here, 75.84. And then after that, you say, oh, it's going lower. Then you take this candle going right across here. And what is that? That is this candle. Okay, so it's easier to say, you say, oh, I can just watch the notches of the candles exactly on how it goes down. So I look at here, oh, I see a notch. Well, that's the bottom of that candle. Then I bring this price channel across. Well, that's the bottom of there. Okay, so it makes it very easy, I should say, to see exactly where your support levels are. See how that works? All the way on down. Okay, very, very easy. Now, you can use Bollinger Bands, you can use clouds. I just found this is so much more accurate because all it is the bottoms and the tops of candles. That's all it is. Okay, very, very simple. Okay, so all you do is you just follow those candles. Oh, what did I do? Right on down. Okay, and that gives you all your support levels on the way down. Okay, same way as on the way up. We have these nice price channels that follow. Okay, so what you want to do is you always look back to those. Okay, so what it is when you come right across, that is a support level. Okay, this right here is a support level. See how nice it held right there, all this here right across, and then we come right over here. That's a support level. Okay, now that becomes a very, very big resistance level. Now I just keep this simple here. I use simple moving averages, and all this is an eight day, which means it's just 8 day is an average over an 8 day period. Okay, so that's an 8 day simple moving average, 21 day simple moving average, 50 day. You have your 100 days, your purple, and then your 200 day is your 200 SMA. Now I use volume. You always want to use volume to make sure everything's intact, and I use RSI. Now RSI is basically your relative strength index. Okay, but a lot of times you can find different things on here that you can use to your advantage. I'll give you one example. Okay, so when this price came on down here, you look at this RSI, put it in a low. Price came all the way down here, even a lower low. Where did the RSI? Higher low. See that positive divergence? That's positive divergence. That tells me when that comes down here, and we have here, that time you got to get long. Then you match that up with the bottoming data. Now, one instrument is a do-all, end-all, be-all. Okay, let me just put it that way. So you want to use multiple things like this RSI. Say, wow, I got positive divergence. What's happening here? I got a bottoming tail. I can take a long. That's how you want to trade. Use these to your advantage. And then MACD shows basically momentum, okay, to the upside or to the downside. Example. See where the green closed below the red here? It's right below the red. What happens? Sells right on off, okay? You get your green above your red. What happens? Look at that. See? Very, very nice here to have these. So if this green can curl back up here, then we can take the price up. If not, you're going lower. So you always want to just keep things simple. This is all I really use here is just your price channels, your simple moving averages, volume, RSI, and MACD. That's all you have to do. Now, again, when it comes to oil, natural gas, and everything, you really want to also pay attention to the news, especially now when there's a lot of fighting going on in the Middle East, and there's this and that. Same way with natural gas. You want to know when the shutdowns are. You want to listen to that API report, the EIA report. Everything on that order is what you really want to watch, okay? So that is the key. Always to be full of information. That is the key to trading. But Keep it simple. Now, another good example here of like where this ran right up here, okay, into your 21 day and then just pulled right on back. Here's another example where it came right on down. Where did it go? If it loses that 8 SMA, the next one in line is going to be that 21 day. See how nice that is? Boom, that was support, and then to push it up. But look how strong this 8 SMA is here, okay? So you popped up, yeah, but where to close? You popped up, where to close? Where to close? Where to close? Where to close? See how strong that is? Until you can break sideways like we had here. But again, then you ran into this key 200 simple moving average, and it just, not going to get through the first time. Now, again, we have to watch there, like Sunday night when the futures come out there, or Monday, however you trade. Now we just have to watch at the bottom of this candle. So we had a low of 78.14. So what we do is we follow the next candle, 77.55. And then we come around here to your retest at 76.89. If that's lost, then we just follow these candles all the way on down here until we find a bottom. That's all you have to do. Now, on the upside, what you want to do, the price has to get back above that 78.36. You have to get it back above this 8-day at 78.78. And then you're going to attack that 200-day again at 80.14. Now, when those futures open, this 8 SMA is going to be lower. You might even cross that 200 at a 100 SMA, and this 21-day will be lower. Now, that's going to become resistance. Now, when you have that, then you fight that thing all the way, okay? So here's another example when the price gets above this 8 SMA here. See how it is? And it just rides it all the way and up until it breaks. Then what it does is that once you lose that 8, it comes down to the 21-day. If you lose that, then you can come down here. Then you start looking for the next one, the 50-day and the 200-day. But then it rolls back up here. But you see how once it gets above that 8, how it rides back up. Now, look what happens when you get below this 8, okay? See, it comes all the way down, popped up, but where to close, okay? Now, it started getting a little bit crazy here. Went up, where to go? 21-day. Yeah, did it pop up? Yeah, but where to close? Below that 21-day, okay? See how simple it is? If you just keep things simple, that is going to be the key, is simplicity on the old charts, okay? But again, then you also want to look for different kind of scenarios. Now, we had that nice bottoming tail. That was a good trade to take, but you knew it was not going to get through that 200-day the first time. That's where you got to dump your position, okay? That's the key. Always look for these because these bottoming tails come in all different kind of shapes, all different kind of sizes, okay? See this? All different kind of shapes and sizes. So always watch that. Another thing that you want to watch here is these double top situations. Here's a perfect example where we had a bottoming tail and it ran right on up here, and then all the way, it topped right out, okay? And then what it do is it came down and then we topped out again. See this? Classic double top. Even though it put in 3 cents higher than what that candle was, it can go higher, it can go lower. That's a double top. That tells you got to get the hell out. You either, however you should do it, like what I do is I sell my long position and I start getting short. And then once you close below this 8 SMA, you can add to your short because you're not getting through that. That's just that simple as that, okay? Once you get through that, and then when it came all the way down here, then, okay, you can dump it. But now you see, okay, it was holding that, 50-day. Well, even though it popped through, that is a good long scenario that you can take. Say, hey, I can run this up. But you know it's going to stop dead right at that 21-day. So if you know where something is going, how much money can you make, okay? So, hey, I know where to buy this thing. Hey, I know it here, but I can run this all the way on up here, okay? See where it goes. Now, I just keep running all the green until I get that reversal candle. Then I say, boom, I got to get out of trade. But you stick with this until the chart tells you to get out. This red candle tells me you got to get the hell out of there. That's just as simple as that. Then what I do is I didn't take anything because I'm wondering, let's see, is this going to blast up higher? Then I can always take a long. Is this going to go lower? You know what I mean? We just had nice trading sideways action here, okay? But same way with here. You're holding that 50-day. That tells you, man, I got to get in here. I got to take me a long because we're holding this 50-day and we have a low, a higher low. But when you go into that 21-day, you're not going to break that the first time. That's usually a sell point and then it comes down. Now, I usually sell and then I'll short, okay, does it position down. Depends on how crude or natural gas or, stuff is acting. That's the key, is how it's acting. So now we just got to wait and see what it is. So got to let the trade come to you, okay? So what you always want to do on Sunday night or Monday, however you want to trade, is you watch that high at 79.96 and you watch that low at 78.14 and then it close at 78.20. This is what you want to watch and to see what happens. Now, if it shoots lower, then we follow the candles down until we get that retest here of 76.89. Then we wait and see what happens when it does hit that 76.89. If it does, what happens? Does it blast through? Does it close above? What's happening? That will determine if you're going to take a long or you're going to take a short. Now, say this pops back up. Well, then what you want to do is you want to watch that 100. You want to watch that 8, okay? And then you want to watch that 200 day. Can it get through there? This is 1, 2 times. You couldn't get through. Maybe the third time's the charm. But then again, if it goes through, then you got to watch that 21 day. Then you got to watch that 50 day until you can clear above all of this. And unless you get some dramatic news that somebody, boom, they wiped out an oil field, they wiped out this, you know what I'm saying, or something on that order, crude is not going to just pop right above here. This is going to be very, very strong resistance, your 200 day, your 21 day, and your 50 SMA here. So always remember all of that. Okay, that's what I got for you here today. Now, I got one more thing left here, is I got this guy, they call him Einstein, Peter Tuchman. He's got a little 5-minute video here on trading. So it's really worth your while. Now, I do a little Tuchman here about the last couple of weeks here, and this is like a little bit bigger view here on how to trade and how he puts the stop losses in there. So it'd be up to your, to your advantage just to give a listen.
Peter Tuchman will be the opening speaker for this FX Summit 2024 conference, the most anticipated conference in the world for traders. Peter, are you excited to come out to Dubai?
Look, I am so excited. I'm honored to be there and be your speaker, man.
No problem. You mentioned 5 rules that retail traders should know, and then I was wondering if I could give you a few of the rules that I follow and get you to critique them.
Okay, good. Yeah, go for it.
So what would you say the 5 rules of day trading are?
Successful day trading.
So with your over 30 years of experience on the New York Stock Exchange, what would be the top tips that you could give for successful day trading?
Okay, so first of all, as a broker on the floor of the stock exchange, what I do for my business, which is trading the S&P 500, even though it is considered day trading, it's not what I teach retail people about day trading. It's a different thing. So let's separate that. So it's not from 30 years experience, because for most of my career, I didn't day trade. I was representing house brokerage firms, Cowan and Company, convertible arbitrage, other stuff. Wow. So what I've learned over the last number of years about day trading, about technical analysis and risk management, is what I need to convey to you guys, because that's where you're going to see value. So at the end of the day, the rules are simple, and they're just like this. Have a plan on how much money you want to make in a day. And when you reach your goal, turn the machine off and go home. The only thing that you can't get back is time, right? Time is the most valuable commodity in the world, right? So think about that. If I'm a 100-share trader, I should be making $100 a day. If I'm a 1,000-share trader, I should make $1,000 a day. That's my goal. When I hit my goal, I turn the machine off, go home, go hang out with the kids, go to the beach, drink a Coca Loco, whatever the F you want to do. Okay? Secondly, have a stop order on every trade you do, and never change your stop order midstream. If I buy 100 shares at $50, I put in a stop order at 49.5. You have a target amount of money. When you hit it, turn the machine off. Every order you enter, you have a stop order. What does that mean? I buy 100 shares at 50. I put in a stop order at 49.5, down 1% of the stock. Okay? If the stock goes to 50.5, first of all, if the stock goes to 49.5, I get stopped out. I never change my stop order. I'm out of the trade. I lost $50. Gesundheit, hate, it's a beautiful thing. If it goes to 50.5, I immediately take a profit, because trading with a profit, with a little money in the bank, is the greatest sense of confidence you can have. So let's say I bought 100 shares, I sell 50 shares, 50% of my trade, up a $0.50. Okay, and I moved my stop order from 49.5 to 50, break even. So now I just made $50, and I now cannot lose money on the trade. That is the greatest way to learn and to trade, knowing that I just put a couple of dollars in the bank, and now I cannot lose money on the trade. Okay, what an amazing feeling. And then if it goes to 51, I sell 25% more of the trade, and I raise my stop order up to 51. So I'm locking in a 50-cent or a dollar profit. And as the stock goes in my favor, I'm going to use a trailing stop order or a bracket order to get the most out of my winners and to lose the least out of my losers. That's the nature of this business. Then what I'm going to do is, if I'm up and I have reached my limit and I turn my machine off, if I'm up $1,000, okay, or I reach my limit, I turn the machine off and go home. What you never want to do is turn a winning day into a losing day. If you ask any retail trader, have you ever been up 1,000, you thought you had diamond hands, you start betting, trading irresponsibly, and by the end of the day you're down 4,000? Yes. You turned a winning day into, it's the worst feeling in the world. You're kicking yourself in the head going, at noon I was up $1,000 and now I got to go to the ATM 4 times. How stupid is that?
And it's worse than losing money.
It's way worse than losing money.
Yeah.
So that's turning a winning trade into a losing trade, and that's turning a winning day into a losing day. So basically, that's kind of the. And then, let's say you get into a trade, you lose, you get stopped out, you lose $50. You get into another trade, you get stopped out, you lose $50. If you have 3 losing trades, you turn your machine off. Okay. Otherwise, the psychology of trading, it's called revenge trading. I got to get back what I lost. You start trading irresponsibly, and you end up going home down not 150, which is what would have happened if you turned the machine off, but you're down $3,000 or $4,000. Okay, so never revenge trade when you'll come back from a bad day. You'll come back from a bad week, but you'll never come back from being up $500 and by the end of the day you're down $8,000. So those are the 5 trading secrets. Now, if you look at somebody who's a trader who's unsuccessful, he does the exact opposite of that. He never uses a mental stop order. If you use a mental stop order, you're mental. First of all, he doesn't have a goal in mind, so he's just trading like rampantly. He's up 200, he's down 500, so there's no organization or strategy there, right? And he doesn't know about turning winning trades and winning days into losing days. And then when he starts losing money, he stays in, he goes all in, and he starts losing money more and more and more. The analogy I use is when there are 2 kinds of gamblers that go to Vegas. There's a guy who says he's got $1,000. He sits down at the blackjack table. He said, if I make $1,000, I'm going to turn it off. I'm going to go to Ruth's Chris, get a steak, take my family to see a show, and I'm going home. The other trader has no plan, has no strategy. He goes in there, he's up 1,000, he thinks, great, I got 2,000. He starts betting and betting and betting. By the end of the night, he's down $8,000. He's been to the ATM 5 friggin' times. He doesn't have enough money to pay his rent, and it's a losing situation. So there are strict rules. I'm happy to share them with you 1,000,000 times over, because those are like the 10 commandments of day trading. And if you can't follow some of your rules and some of mine, because you will lose, right? I hear people say, how you doing? Well, I'm batting 80%. Really? So you're up, you're profitable. Well, no, not really. So I said, well, how is that possible? Well, I had 4 winning trades. I made $100 each. So I was up 400. Then I had 1 loser and I lost $8,000. Well, that's not a sustainable trading strategy, right? To be betting that way or trading that way. So you got to follow the rules, learn the game, right? There are strict discipline and consistency are really the keys to the castle to be a successful.
Okay, that was Einstein. He has some really, really good information. I think you should just look at that video and replay it and get that whole gist of exactly what he was saying. Now, hope everybody learned a little bit today here on all of our trading. That's what I got for you. And I'll be back here Sunday night before 7 o'clock, and we will review crude oil here and natural gas. Thanks for watching.